Hey everyone, this is Dan with Data Trend. Today is Tuesday, March 15th, 2016. It's about 3:30 p.m. or so Central Time. The market's closed a half hour ago. It was kind of an uneventful day out there today. And actually, before we even jump into the markets, I just want to mention real quickly that the video tomorrow night's going to be coming out a little bit later than usual. It'll probably be, let's say, at least a couple hours later than normal. So I will get it out, but it may not be until 8 or 9 p.m. Eastern Time. At any rate, we had a slight update today, or a slight down day today, after the market kind of opened lower, traded down to around the 5-day simple moving average, found a little bit of support there, and ticked a little bit higher. It ended the day, the S&P here at 2015.93, down about 0.18%. Um, and it's really, I think everybody's sort of sitting around waiting for the Fed to come out tomorrow and say whatever they're going to say. And that event has the potential to move the market. I don't really care what the Fed says one way or the other. I mean, fundamentally, I sort of do. But from a trading standpoint, what we care about more is when those events take place. And so tomorrow we know that there's the potential for the market to move. On a daily time frame, it has the potential to move up here to this 2040, 2045 level, at least if we get a push higher. And that would fill that gap back from the beginning of the year, January 4th, when the market gapped lower and headed lower from there. So whether or not that happens, we'll have to wait and see. The market's sitting right here around the declining 200-day simple moving average. The 50-day simple moving average is still sort of declining. It's kind of flattening out a little bit, even though, as I look at this now, the 20-day simple moving average is rising, the 10-day is rising. So we have this shorter term period of strength within the context of this bigger picture decline or distribution. So if we drop down to the 65-minute time frame, you can see here that even though we had that gap lower this morning and that little bit of a pullback, really nothing changed on the shorter term time frame. The market came down, it found some support right around that 2010 level, 2009, 2010. And that was this prior high. So this prior resistance acted as support, and the market continued to turn higher, and it's still just, it's ticking along here. And really, even though there was that pullback, nothing has changed in the bigger picture. On the downside, we're going to be looking at this level is a little bit more important, the 1990 to 1995 area. That's the gap from, I believe it's last Thursday, Friday, somewhere in there. And then also this level down here around 1970. If the S&P gets down below that 1970 level, then there's going to be even more reason for concern. But for the time being, it kind of looks like we're just chopping about when prices sort of moving sideways to slightly higher, but we do have the potential for movement tomorrow, and so that's something to be aware of. The CIB that was open yesterday is still sitting essentially unchanged, and that's largely because the market's essentially unchanged. So the upper expiration break even is here around 2040. So if we do get a big push higher tomorrow, we may be at a point where we need to make an adjustment. And on the downside, the lower expiration break even is around 1940. So we'll hop over and take a look at that trade now. So this is the position at the close today. The market closed here at 2015.93. It's sitting right there. And the price slices are set to a 1% move higher and a 3% move lower. And we sort of look at that just to give ourselves an idea of what the position would look like if we were to have something of a more significant gap in the morning. So on a 1% move higher, we'd be up here at about 2036. We're still within the body of the butterfly. We'd give back the open profit that we have on the trade. We'd go from having an open profit of around $45 to being down, say $4 or $5. But we'd still be in pretty good shape. And even if we got a gap up to that 2045, 2050 level, the trade's only going to be down a little bit of money, and we can just adapt. The T+0 line is still in pretty good shape. And on a move down to the 1955 level, we'd be looking at a larger open profit, and we'd be thinking about either rolling this down or protecting this butterfly. As the position sits at the close today, the delta is negative 2.4, the gamma is negative 0.01. We have about $9 in theta, just under $9. The vega is negative 34.68, and the open profit on the trade is about $45. So for now, there's really nothing to do but sit and wait. I didn't actually mean to click that there. We'll unclick that. If we do build up a little bit more profit in this butterfly, something that I've been looking at doing is going ahead and just reverse Harveying the position. So I'll go ahead and show all here. And what I've done is I've added a simulated trade here. And what this trade would do is it would, so let's just step back here. So right now we have the 1925, 1990, 2055 put butterfly in SPX. And so one of the things we could do is we could do the reverse Harvey, and we could take off this 2055 and we could move it down either 5 or 10 points. and we could get rid of this 1925 and move it in 5 or 10 points. So if we were to do that, if we were to knock in the upper long put and pull up the lower long put by 5 points, we could do that by selling a condor. And so I've just added this 2055, 2050, 1925, 1930 condor here to see what it would look like. And it would do that to our position. So you can see there without and there with the adjustment. And so what that has the effect of doing is it reduces risk, it flattens out the T+0 line. You can see that if we had that move up higher in the morning, we'd be in a slight open profit situation. If we had the move lower, we'd still have an open profit, but we'd give up a little bit of it. And that's just because we're a little bit shorter delta as we sit right now. So if the trade builds up a little bit more profit, say in excess of the $125, $150 neighborhood, this is something I might consider depending on where the market is and what's going on at that time. But as far as the CIB goes, that's all I have. One thing I did want to point out is I know that, as many of you know, I trade RUT, and I'm sure that many of you trade RUT as well. So I just wanted to look at this real quickly. And so this is a daily chart of the Russell 2000, the RUT. The RUT was off quite a bit more than the S&P today, 1.62%, to end the day at 1066 and some change. But even though it was off quite a bit, it's still kind of in this sideways type of movement. And on the shorter term time frame, if we drop down to the 65-minute time frame, you know, it looks more like it's moving sideways than it's really deteriorating and coming crashing back down. So we do have this area here up around 1087 or so, and this could potentially be a lower high on the 65-minute time frame. But the market really still hasn't made a lower low on this time frame. We do have the 5-day simple moving average kind of crossing below the 10-day simple moving average. You can see the red is the 10-day and the yellow is the 5-day. But for the time being, it looks more like sideways consolidation. You know, certainly getting down below this 1054 level would be significant in the short term and would likely bring the market down, you know, at least to the 1045 and maybe to the top of this prior consolidation down around 1036. But for the time being, it sort of looks sideways to me rather than lower, even though there was that big pullback today. You know, part of it is just that the market's been moving so much on a percentage basis that a 1.62% down day isn't all that significant right now. So at any rate, that's all I have for tonight. I hope it helps. If you have any questions, feel free to shoot me an email, info@thetatrend.com. And just a reminder, tomorrow's video will be a couple hours later, so check out for that. Thanks for watching.